Hey, everybody, Geoffrey Beamer here. Welcome to Earnings Call. I'm the Senior Investment Strategist over at ewotrader.com. Welcome to our show. If you're not familiar with what we do here, we highlight stocks that have earnings coming up this week, talk about the significance of those, but we don't just talk about the earnings and give out estimates. We talk about how to make money from these stocks and their earnings announcements, all right? So we break up our strategy into two categories: quiet stocks, meaning stocks that don't move very much, and breakout stocks, stocks that are just going to pop big. And we are ready to kick off the new earnings season this week. The banks are highlighted. Banks galore this week have earnings. And an interesting note that most of our stocks this week are going to be on the quiet side. All the banks, with the exception of one, will have quiet earnings this week, and you'll want to find out which company that is that we think might break out this week. But what boils down to is that 42 companies of the S&P 500 have earnings this week. 6 of those are on the Dow. That's 20% of Dow stocks have earnings this week. So you'll want to stick around with us as we go through our list this week. And here we go. So instead of just rattling off those stocks, I want to show you the list for this week. And you'll notice on the left-hand side of the ledger there that these are the breakout stocks. And notice that this is a very quiet list this week, only because this is the beginning of the next earnings cycle, and we lead off with the banks. So on the right hand of the ledger, we have some of the big names, as you can see: Citibank, Goldman, JP Morgan, Wells Fargo, Bank of America, Charles Schwab, and others. This is not an all-inclusive list by any stretch of the imagination. These are just stocks that we're going to highlight because they have significant, because they are significant to the market, or they have the best possible profit scenarios behind them. All right, so we're going to start off with our quiet list this week. All right, as we do every week, we're going to knock the quiet ones out. And let me show you an example of what a quiet stock looks like. Okay, so here we have an example of Pfizer. Now, Pfizer does not have earnings this week. All right, this is just an example of a stock that is a quiet stock. Okay, so when we talk about stocks that just don't move very much, we're talking about stocks that move single digits through their earnings announcements. And Pfizer is a great example of this. This stock moves less than 4% over the past 5 earnings cycle. And when they have their next earnings announcement coming up here in a few weeks, then we probably expect the same thing. All right. But we don't guess at these. We allow the options market to tell us. These are some of the best traders in the world, the options specialists. So we want to pay attention to what they are forecasting into the option prices and how we can make money from these particular moves. Okay, so let's get into our list this week. If we jump over to my chart here, we'll start with Citi. All right, now Citi is going to have a earnings announcement beginning tomorrow. This is when that all sets off. Now we do have one company that is non-financial that we will highlight that has earnings today after market close, but we'll get to that here shortly. But tomorrow is the big kickoff day. Okay, so Citi in the morning on well, that's not right. 7/20 July of 25. We want to say actually July 15th. Okay, on that. All right, before market open. Now, Citigroup is going to have an average move of just 5%, not very much. Now, the fact that this is an $87 stock, and this is the case for a lot of these banks, they are nice and elevated. They have nice pricing. So a quiet strategy like a counter spread, or specifically what I like are iron condors, selling premium to bring in expensive IV and allow the stock to move or not move through the earnings announcement. The iron condor gives me the ability of trading within a range and profiting from the non-movement of the stock. That's what we're looking for. Now, Citi would be one of those that I would look at, being an $87 stock. And you're going to notice a lot of these patterns are the same. Okay. So, for example, let me take you over to JP Morgan, and you're going to see almost a very similar stock chart where the financials have all rallied very nicely, and now they've pulled back just a little bit and they're consolidating. Okay, now JP Morgan is another bank that who really leads off every earnings cycle. Okay, they will have earnings tomorrow morning on the 15th, not the 25th, on the 15th before market open, and the average move here is less than 5% for for JP Morgan. Sorry, for JP Morgan, again, a quiet stock. And now this is a $288 stock, and usually you can get some nice premium from those more expensive options. Okay, because these are usually higher priced options on a stock that's up here in the $200 range. And you have the ability of possibly generating a nice trade out of this. Now, a stock that's even half the price of this is State Street. Okay. Notice again the nice rally and then the consolidation here. State Street hasn't pulled back as much as many of the other banks, but they are going to have earnings tomorrow morning on Tuesday, July 15th, before market open. And the average move here is less than 6%. Okay. So you're going to, on a $109 stock, you're really going to be looking for a move of only about $4 or $5 on the stock. That's average. Okay. On a stock like this. And, these companies are so big that it really takes a lot to move the needle. Okay. So all these stocks that we're going through, especially all the banks, with the exception of one, are going to be a sideways strategy candidates, meaning we're going to try to sell premium to profit from the non-movement of the stock. Okay. Now, Goldman is one of our favorites every earnings cycle. Now, has gotten very pricey. It's a $700 stock for Goldman. They are going to have earnings on Wednesday, July 16th, before market open. And look at this. The average move of Goldman is just 4%. Okay. So even at $700, the stock is probably not going to move $7 or $8. It's probably going to move or 8%, excuse me, it's not going to move like 10%. So like 70 or $80. It's going to move $7 or maybe even $4. It's not going to move very much through earnings, which is pretty typical of the move. All right. So not much of expected from Goldman. And yes, I was exaggerating a little bit. It's going to move more than $4 or $5, but it's not going to move very much in relation to its stock price. That's the thing. So a sideways strategy like an iron condor for Goldman is definitely something that we would be looking at. And it is a one that we do have actually a lot of success with. All right. Now, Morgan Stanley is also on our list here. You can see the nice rallies. This stock has gone from $100 to $143 since April. Very nice move, just like all the financials. The financials are one of the strongest groups and have been for quite a while now. And we'll see if there's some follow through here. All right. So Morgan Stanley has earnings on Wednesday, July 16th, before market open. And again, the average move here is 4%. Okay. So again, we're not looking for a double digit move at all. We're looking for a few dollars of volatility. And who knows, it could whipsaw. It could, drop $6 and then rally the rest of the day and close down $2. We see stocks that do that all the time. But what we're not expecting is a big breakout of double digit moves for the stock. Again, big financial company, and just not expecting a big move. Now, another big financial is Bank of America. They have pulled back probably a little bit more than the others here, but they will have earnings on Wednesday, July 16th, before market open, and their average move here is about 5%. All right. So again, on all these financials, we are looking at iron condors, calendar spreads, butterflies, things that just will profit. These are option strategies that profit from a sideways movement of the stock. Specifically, I like the iron condor for all these. Now, interestingly enough, we have looking at non-financials for a moment on Thursday. Okay, we have Netflix. Now, Netflix is always a headliner during earnings season. They will have earnings on Thursday, July 17th. after market close. All right. And the average move here, believe it or not, is just 8%. Now, this is one of the first earnings cycles that I can remember where the average move of Netflix has dropped below the double digit mark. Okay. And that actually occurred the last earnings cycle when it was forecasted to have a 10% move, and it didn't. It moved about 6% through that earnings announcement. And this brought the average way down. So we're not really expecting much. Again, it takes a lot for Netflix. And again, what is, are their subscriber growth? Are they expanding? Are they declining? What's their outlook? That is always a critical thing with Netflix. So while we don't expect a big move, I would definitely watch the earnings announcements and specifically the outlook, because now, this particular stock, I would probably sit on the sideline, honestly, with, because I wouldn't do a straddle or strangle. I wouldn't do an iron condor. A straddle or strangle is for our breakout stocks, which we'll get to in a moment. But Netflix, man, it's in that transition right now where it's getting so big that it really needs a big news announcement or a big news something to impact that price to really get it to move. And this is a $1,200 stock now. Okay. Maybe they'll announce a stock split, maybe a 10 for 1, and we'll get back down to 126 where it's a little bit more reasonable. All right. So on Thursday, I'm going to go over a couple of more stocks that are declaring on Thursday that have earnings, but make no mistake, there are still banks declaring on Thursday. So I know one bank, a Bank of the Ozarks, has earnings on Thursday. So there is even more banks that will declare on Thursday. I think U.S. Bank Corp is Thursday, and others. All right. So the banks are just really dominating the news cycle. But I wanted to give you an idea that there are still some other big names outside of the financials. Okay. Another name is outside of the financials is PepsiCo. All right. They have earnings coming up on Thursday. The for I didn't edit the date, so let me get that updated for you here. I got the average move. That's the 17th. All right. So Thursday, the 7/17. All right. That is before market open. They do have earnings before market open. And yes, the expected move, which is the average move, is less than 4%. All right. And again, we're looking at a company that is huge, that is diversified. And when that happens, um, pricing settles down. Okay. Movement in the stock settles down. So even though Pepsi has been selling off lately, you can see that it has been in a consolidating range right around this 130 mark for quite a while. Recently, it did catch a little bit of a bid prior to earnings, but then began to consolidate a little bit. But here, we're not really expecting much of a move here, maybe for no more than 5%, but its average is now less than 4%. And that is why we would definitely consider something like an iron condor through the earnings cycle for Pepsi. And we've actually had great success with that. Now, another stock, Novartis, okay, outside of the financials, will have earnings on Thursday, the 17th, before market open. Okay. So in the morning, and the average move here for this particular stock, okay, in the drug business, less than 4%. Okay. Just not a big mover through their earnings, and really probably a bigger move from potential FDA announcements, but earnings not so much. Okay, the average over many earnings cycles is now just about 4%. Okay, so as I mentioned, Thursday we do have some big names that are non-financial, but the financials, again, pick up the headlines. Believe it or not, on Friday morning, we have Charles Schwab earning on Friday, the 18th. Again, these are all going to be Friday earnings announcements are all before market open. The average move here is actually pretty decent, 8%. Okay, so we might see a bit of a move from Charles Schwab, but they are starting to get a little bit more quiet than they historically have been. Okay, Another financial is Comerica. Again, looks like the financials, nice rally here for Comerica, and they have earnings on Friday. And I don't know why a lot of my text did not say, but that should be 718 before market open. And the average move here is about 6%. Okay. So again, quiet stock, not much of a mover, but 6% is on the table. And finally, American Express, another financial here. They have earnings on Friday before market open, and the average move here is about 4%. And take a look at this. I left this tag on from last time. The average move then was less than 7%. But again, the volatility through these earnings announcements are decreasing for certain stocks, and American Express is one of those. And they only have a move now expected to be about 4%. And this is a $300 stock. So this is definitely one that I would look at trading a strategy like an iron condor on for a quiet move and put my break evens way out of the money, because they're still going to be nice premium down here at 290, at 280, maybe even at 270, way away from the money on these types of stocks because they are so expensive and they often have a lot of strikes, and definitely a way to create a high probability trade. All right, so let's put up our list once again on our potential our quiet stocks. We have gone through a bunch of them, but you can pause it and go back and look at that list and just get all the dates for the banks there. JP Morgan, Citi, State Street, even more banks kick off the day tomorrow before market open. I mean, bright and early. So we're all going to know kind of what the trend is for the rest of the week. All right. Okay. So that's our quiet list for this week. Let's transition over to the breakout stocks. Now, these are the exciting stocks. These are the ones that move the double digits, that get the headlines. But here's the thing. We don't have many candidates this week. It's a very quiet week this week. In fact, we only have 3 stocks, and one of them is a financial. And you can see there, Triumph Financial. Have you even heard of them? Probably not. Okay, but they have earnings on Wednesday. But let's talk about some of these. Let's look at the chart, starting with today. Okay. So beginning today, we have Simulations Plus. Now, this is a pretty inexpensive stock, about $17. And we would want to do a straddle or strangle through these earnings announcements. Now, the average move, and I'll just tell you here, since my box, I didn't get my box saved, it has an average move of about 13%. All right. Now, that is the highest that we have for this week. Triumph Financial should move about 13%, but you can see nice consolidation move. I like that. Straddle or strangles for this should be relatively inexpensive, so smaller accounts could trade it, okay, because it is a $17 stock. But they will have earnings today, Monday, the 15th, or excuse me, Monday, July 14th, sorry, after market close today. Okay, jumping to Wednesday, all right, now we have ASML. Now, what's interesting about this stock is that it's an $800 stock, okay? We have traded this stock through earnings a lot and have had great success, but the problem now is on an $800 stock, your straddle or strangle are going to cost thousands of dollars, okay? Now, it's not that they can't make any money, because they sure can, but what this does is disqualify smaller accounts from trading this type of stock just because the size of the trade is so expensive and prohibitive for smaller accounts. So ASML will have earnings on Wednesday, the 16th, before market open, and the average move here is still over 10%. In fact, it's about 11% for ASML. So if you have a larger account and you can get a straddle or strangle off where your break evens are about 8 or 9% away from the money, then this would be a good trade. But otherwise, I would kind of just sit back and watch it on Wednesday because they have earnings first thing in the morning. And then for our one financial here, Triumph Financial, they are the ones with the biggest potential move this week. They have earnings on Wednesday. the 16th after market close. All right. Now, this is a $65 stock. This should be very affordable for a Straddle or Strangle. However, with a lot of these, and you need to remember this, with a lot of these, the option market makers have priced in that move already. So don't be surprised if you price out a Straddle or Strangle here, and all of a sudden you do your calculations on, well, how much does the stock need to move for me to profit? Because you have two debits, one for the call, one for the put, and you add those to the current price of the stock, and it's got to move more than that for you to make money. And oftentimes it's right at 14%, maybe even 15%. And that's not worth doing. The option market makers are really good at this, but every now and then we find where pricing does favor us. So if I can get in a trade for about 10% of the stock price, so meaning I'm around $6, maybe even $5, I would be all over it, okay, on this stock, because it has an average move of 14%. And that's what I would be looking for here. All right. So that is our list. Believe it or not, we only have 3 potential breakout stocks this week. That's it, because our list is dominated by the financials. Okay. And as I mentioned, there's even more than what is on our list this week. So this is a litmus test for the market. Okay. Can we continue with this rally? The financials will help dictate that this week. So it is a big, big week. Now, one thing that we do here on the show is I give out trades each and every week for stocks that have upcoming earnings. It's something that we do. All right. And if you like what we do, you can follow our channel and subscribe and like this video, which I would appreciate. And what we do is feature a chapter feature at the bottom of the video, so you can jump ahead and see the different stocks that we talk about each and every week and what is being expected. And again, it's not our opinion, it's what the option market makers' opinion is of a stock and the average move. Okay. We're using all that data to give you that information of what's expected from this stock. Okay. So the advantage here is that we're not picking a direction. Okay. These strategies make money from non-movement for the quiet stocks and from big movement, either up or down on our breakout candidates. I don't care which way it goes, as you'll see here coming up, because let's talk about some trades that we've given off in the past, including an open trade, and then last week's trade, which is just you're gonna want to see this. All right. And then I have another trade for you this week. So let's talk about Daktronics here. Daktronics has we've had this trade for now 3 weeks at least. We're down about 36% in the trade. The stock was right at our upper break even. We were looking for some follow through, but it has quieted down. Now these options expire this week, okay, this Friday. So I'm only going to give this a couple of more days, and it can rally. It's up a little bit today, and it could definitely rally here the rest of the week. But we have just the stock just did not move like we expected after earnings, and it took a little bit more time for it to move, which it finally did. And so we're hanging in there. We're just trying to manage the risk in the trade. Okay. But last week's trade is going to make up for this. Okay. Let me tell you, another home run trade for us. Okay. We took a look at Byrna Technologies. BYRN is the symbol here. We did a strangle on this. Okay. And take a look at what happened with the stock. After earnings, the stock just dropped like a rock. Okay. And we sat with this for just one additional day. And look at this, another, what we call anything that is triple digits, because it's such a short time frame. Okay. For Byrna, it was actually not 7 days. It was about 3 or 4 days that we were in the trade. And that was a profit of $447 per strangle that you did. Okay. So that was 178% return on risk in less than 7 days. All right. You may say, well, that's unbelievable and that's not possible. And yes, it is possible when you are using options and you're using them the right way. So Byrna was our second trade within 2 weeks that we've actually made over a 100% return on our money on. That is why you want to tune in each and every week right here on our channel, is because of these types of opportunities. So what do I have in store for you this week? Well, as I mentioned, we are dominated by the banks this week. All right. So what we want to do is take advantage of a quiet stock every now and then. All right. So the trade that I have for you this week is going to be on one of those quiet stocks, and we're going to look at American Express. All right. This is a $300 stock. And this is what I like about American Express is, believe it or not, even though they are a $300 stock, they have strikes every $2.50 up in this range. Okay. So meaning 300, 302.50, 305, 307.50, 310, etc. Okay. And so what I'm looking at is with these iron condors, all it is you're selling a call spread on top and you're selling a put spread on the bottom. You're combining those two strategies. You can do it as one trade with all of your brokers, except especially your option specialty brokers. You can do it all as one trade, and it's called an iron condor. That's a strategy that you're looking for if your broker has pre-computed strategies on there. And this is one of those. And believe it or not, with this trade, I am using these half strikes, okay, to keep my debit low. So you'd probably want to do at least two of these, and your risk is going to be under $500. Believe it or not, on a $300 stock, I can do this trade for under $500. Actually, two times under $500. Okay, not $500 a time, but the whole trade using two contracts or two spreads on top and two spreads on the bottom. I could do it two times. And if I did it one time, it would be about $170. I think the debit was, and that means you do that twice, and your debit then is going to be $170 twice. Okay, and that is how that works. So American Express is on deck. We are looking for a quiet move with American Express, and we are looking to profit off of that implied volatility collapsing and us keeping the premium through the collapse of the earnings and the non-movement of the stock. All right, so let's keep the winning trend continuing here. Again, two massive earnings announcements that we've had in 2 weeks that generated great results. We're hoping for another one with American Express, and specifically with our breakout stocks, because those are exciting. I do have an offer for you here. You can download our guide on how we trade these breakout stocks. It's available at ewotrader.com/straddle, and there will be a link for you at the bottom of this video. Everyone have a great trading week. It's going to be very exciting as the financials lead us on into this next quarter of earnings. All right. So I will see you again next week, and we'll take a look at that American Express result and have a whole new slew of earnings opportunities for you 1 week from today. So everyone have a great trading week, and I will talk to you again very soon. Take care.